Tesla is probably the hardest company in public markets to analyze, period. Not only is it very controversial, but even if you're digging into its financial statements, it's hard to classify as a business. It is generating cash. It is cash flow positive and has been for years, but the company's revenue growth has been anemic for the last couple of years. If you dive into the details of it, you do realize that the energy business is growing, the services business is growing, but the auto section of the business, which is 85% of revenue, sales there have actually been declining over the last couple of years as the company gives more and more price concessions to its consumers. So Tesla is a very hard business to classify, but if you force me to choose, I would say it's in the operating leverage phase. Although the company has been going backwards and forwards, you can go in both directions on the business growth cycle, and Tesla has certainly been doing that.
It's bringing up a bigger question. Tesla and NVIDIA both play in this area of AI, and people are kind of trying to project out what's going to happen in the future, right? And it makes it a little bit more difficult for these companies where you look at the current revenue growth, right? And you say it's weak, but then people make the case for, an optimist in the case of Tesla. But not just Tesla specific, a lot of companies right now are trying to figure out what is the future going to look like and how does this company fit into it? So how do you think about that as a fundamental investor saying, the numbers don't reflect this right now. There's maybe an industry that's happening, and maybe right now it's AI. It could be something else later on, right? Originally, it was the internet. How do you wrap your head around that as a fundamental investor?
Yep. So again, Tesla is an extremely hard company to analyze if you're an investor, period. Because as you just pointed out, the company has multiple business segments, and those business segments are at different points of the business growth cycle. So the auto business that it has should be in the phase 5 capital return phase, but the company is effectively taking all the profits that it makes from that business and it's redeploying them into the AI ventures, into Optimus, and into other segments of the business, which you should say is absolutely the right move to make given the potential that Elon sees long term for the business. The storage business, the energy business, that was money losing for quite some time. Now it's become actually a more not mature business, but it's to the point where it's generating operating profit, or at least very close to it. So that business was started 6-7 years ago, something like that, and now it is, and now it has moved successfully along that. Well, if you look at the Optimus business, that's clearly purely a startup. If you look at the Autopilot, the full self-driving, the robo-taxi businesses, those are clearly very much in the startup phase. The company also says that it has its own internal chip development program. That's in the startup phase. So Tesla itself, you have to take a look at both the entire company level and the individual segment levels and assign different values to them. That is, again, why valuing a company like Tesla is so stinking hard. And if you were to just look at the company's price to earnings ratio, price to free cash flow ratio, even price to sales ratio, you've been confused for the last 15 years because the number probably doesn't make sense in relation to what the market's been paying for it.